Careful, blink and you'll miss it. The biggest gold rush in crypto history is sprinting straight at us, and only 3 projects have their shovels ready. And seriously, I just watched smart money pour into a corner of the market that most folk aren't even pronouncing yet. So buckle up. Picture this, right? I'm hunched over my laptop at 2 a.m, nursing a lukewarm espresso that tastes like burnt rubber bands, scrolling past the usual when moon memes. Then I stumble onto Santiment's latest dev activity chart and nearly spit out my coffee all over my keyboard. Chainlink, Avalanche, and Stellar are absolutely demolishing everyone else in real-world asset race. That's RWA for short. Now, we're kind of talking tokenized property deeds, treasury bills that live on chain, even yield-bearing Bitcoin that kind of moonwalks around old-school finance like it owns the place. Now, we've all heard Larry Fink's 2025 shareholder letter, right? Every stock, every bond, every fund, every asset can be tokenized. It's a nice little soundbite, right, Larry? But here's the kicker. Santiment's numbers show that the build out is already happening under our noses. We're not waiting for 2030. The bulldozers are revving right now. And I had to know if this was hype or if we're actually standing at the doorstep of a genius $30 trillion floodgate. So, the problem. That's that most retail traders, and let's be honest, half of the analysts on FinTok, don't have a clue, which networks are actually shipping code versus just shipping a lot of hot air. Now, we humans love shiny tickers, but hate reading GitHub commits. So I decided to do the kind of sticky coffee deep dive and test whether the 3 leaders, Link, Avalanche, and XLM, are kind of building castles, or are they just cardboard cutouts? So, first stop, Chainlink, ticker Link. Currently, cruising around kind of $15 or $14 and some change, right? Now, the dev activity here is a bit like a beehive on 6 cans of energy drink, right? You've got functions, automation, you've got CCIP, the whole Oracle kitchen sink, right? It's basically the Bloomberg terminal of blockchains, right? Piping real-world pricing data straight into smart contracts so that your tokenized Tesla bond doesn't blow up when Elon tweets something spicy. Now, Bitwise's CIO, Matt Hogan, literally called Chainlink one of the cleanest plays on the tokenization trend, ranking it right alongside Ethereum and Ripple. Now that's kind of like getting drafted first, overall, and still being told you've got Tom Brady's work ethic. But numbers, they talk louder than pundits, right? So I kind of pulled up their Oracle call counts for the last quarter. Spoiler, right? We're talking tens of millions of requests. So imagine the Oracle network as the kind of checkout scanner at a hypermarket. Every beep is money moving, and Link is the only cashier with 0 downtime. Now, if we really do tokenize every single asset on Earth, well, the Oracle fee stream alone could make today's market cap look like pocket lint. Now, of course, no crusade is complete without skepticism. And my buddy Jake texted me, aren't oracles just glorified APIs? Maybe. But that's kind of like calling Amazon Web Services a glorified hard drive, right? The magic is in decentralizing the data feed so that no single joker can yank the price and rug $20 billion in tokenized real estate. Now, you want that peace of mind, right? And, well, you got to pay the Link toll. So here's a quick pit stop, before we kind of jump into Avalanche. If you want to kind of geek out on this stuff in real time, then our free educational Discord server, Link, is sitting in the description. You can pop in, you can roast my coffee habits, and, debate whether Chainlink CCIP logo looks like a fidget spinner. I dare you. All right then, Avalanche, ticker AVAX, lounging at something like $20 and some change, but perked up a little, after it's kind of sniffing 30 or so. Now, Avalanche, of course, is the kind of logo or Lego set, I should say, of kind of blockchains, subnets that let you spin up your own little universe without clogging the main highway. Back in 2023, their foundation dropped a $50 million mic, Avalanche Vista, a bankroll tokenization project. Fast forward to this year, and Bergen country and New Jersey, yes, the place where kind of bagels thicker than phone books, moved 370,000 property deeds worth $240 billion onto Avalanche over 5 years. Now, that's not some kind of sci-fi prototype. That is literal land and brick and mortar value anchoring itself to a blockchain that you can't misplace, will kind of deed behind the filing cabinet ever again. And if that doesn't tingle your finance nerves, how about the Solve BTC.AVAX? Yes, kind of yield-bearing Bitcoin backed by tokenized US treasuries. Imagine Satoshi Nakamoto and Uncle Sam awkwardly high-fiving at a barbecue then. Yeah, it's that kind of weird and that kind of brilliant. Now, traditional finance is catching the scent too. Van Eyck filed for an Avalanche ETF, Nasdaq got the 19B-4 paperwork in, and the SEC rubber stamped it. So AVAX might sprint like it's being chased by a pack of meme coins on roller skates. Now, here is where I nearly fell off my swivel chair. Right, I mapped daily transaction throughput across the subnets and found a spike the very same day that a Korean real estate fund tested AVAX for fractional ownership. Now, the real dirt changing hands digitally, that is, right? And if you want a kind of mental kind of picture, think Monopoly boards stacked on top of each other, every property square, tokenized and trading 24/7. No banker hat or tin, at least tiny kind of iron that is, pieces required. Now, halfway through my rabbit hole, this kind of reality check hits. So let me kind of drop this very important bit. And it might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. And this video today is for entertainment and educational purposes only. So there you go. The legal gremlins are fed. Let's keep on digging. Next up, Stellar, ticker XLM, trading just under 30 cents, at least at the point of recording, after a bit of a cheeky 21% weekly pop. Now, Stellar is the kind of quiet kid in the class who suddenly kind of benches twice their body weight at the school gym. Now, you're kind of like, where did that come from? Their kind of bread and butter is, of course, cross-border payments, but now they're flexing a token issuance engine that dovetails perfectly with RWAs. Now, they just shipped Stellar Core, that's a v23.0.0 RC2. That's a bit of a mouthful that basically means faster, stronger, and more scalable. Now, in June alone, 197 million on-chain operations. Picture a conveyor belt spitting out a new burrito every 2 seconds, and those burritos are backed by heavyweights. Frankel Templeton tokenized money market fund, Circle's USDC, you kind of name it. Now, Stellar's secret sauce is compliance-friendly design. While everyone else is kind of patching KYC onto decentralized networks like duct tape on a leaky tire, Stellar kind of bakes in permission controls at the protocol level. Now, that's catnip for institutions terrified of accidentally laundering money from Dr. Evil. Now, the hedge fund manager told me, off the record of course, that Stellar's the only chain that my legal team didn't freak out about. Translation, big money might finally be ready to click the deposit button. But hold up, you and I both know that tech progress alone does not guarantee moon landings. Remember 2017 IOTA's hype? Yeah. Well, so how can we, of course, separate vaporware from solid rocket fuel then? Well, developer activity. Now, Santiment's snapshot ranked Link, AVAX, and XLM top dogs, but 𝗗𝗋𝗀, and a few kind of dark horses, they aren't actually that far behind. Right, we're talking GitHub commits, issue resolutions, code reviews, real sweat equality. Right now, think of it as kind of peeking into the kitchen to see if the chef is actually cooking or if they're just microwaving frozen noodles. Now, another sanity check is partnerships. Chainlink's Oracle feeds are already embedded in everything from Aave DeFi loans to insurance contracts covering cross-border crop shipments, right? And Avalanche snagged golden retriever level loyalty from institutions with its subnet design. Stellar locked hands with MoneyGram for on-off ramps that kind of make your grandma's wire transfer look, prehistoric. Now, these are not Discord announcements. They're signed contracts, dev hours, and budgets. And lest we forget, Kraken Pro, yes, that Kraken Pro, has quietly been adding RWA pairs to its advanced interface. Quick disclosure though, I have an affiliate link in the description, so if you open a Kraken Pro account through that link, well, the channel earns a small commission and you get boss level trading tools with deep liquidity. It's kind of like a win-win, and it helps me kind of keep the lights on and the coffee supply flowing. So, where's the climax, the aha that kind of glued my eyeballs to this whole entire sector? And it hit me when I kind of overlaid a timeline of regulatory green lights with dev activity bursts. Now, each time a country, bank, or asset manager greenlit a tokenization pilot, guess what spiked within 24 hours? GitHub commits on those three networks. Now, it's kind of like the dev teams were pre-packing updates in anticipation. Imagine a Formula One pit crew then, changing tyres before the cars even pulled in. That's the level of readiness that we've actually been witnessing. And so, the takeaway, Silicon Valley's mantra, move fast and break things, right? And got an RWA kind of makeover, right? Move fast and tokenize things before TradFi even finishes its morning coffee. Now, these networks, they aren't just twiddling their thumbs waiting for regulators. They're building the pipes right now. So when the $30 trillion fire hose turns on, the water flows through their systems by default. But what does that mean for all of its upside from here then? And it's probably not so fast, right? Remember, risk number one, regulatory whiplash. A single heavy-handed policy could stall tokenization rollouts faster than you can say briefcase full of how we test documents. Risk number two then is the tech fragmentation. If too many layer ones chase this prize, liquidity could scatter like marbles on the tile floor. And risk number three, user experience, right? Have you tried explaining private keys to your parents? Exactly. Still, momentum is undeniable. Link feels like Wall Street's data plug. AVAX is turning government filing cabinets into NFTs on steroids, and XLM is building the rails that lets those assets zip across borders without the swift sloth dance. Now, it's the blockchain equivalent of iron, coal, and steam engines before the industry revolution, or the industrial revolution, I should say. It's kind of like they look clunky right now, but give them a decade and suddenly you've kind of got skyscrapers. And so, where do we go from here? Well, personally, I'm watching three different indicators. One, the institutional pilot announcements. They hint at which chain gets the next kind of 9-figure migration. 2, on-chain dev churn, because code commits are harder to fake than hype reels. 3, interoperability bridges, right? If Link's CCIP or, Alex's, GMP becomes the highway connecting all of these tokenized islands, well, we level up to a genuine global liquidity pool. Oh, and of course, don't sleep on our Discord, right? We run weekly voice chats where we dissect dev dashboards, share charts, and occasionally argue over whether espresso or cold brew kind of fuels kind of better technical analysis. Now, the invite of course, is in the description. It's completely free. And if the room kind of feels rowdy, just kind of mute the meme channel for now. Trust me. Now, before we kind of wrap up, here's the kind of lighter, fluid moment that kind of set my imagination ablaze. A friend of mine in real estate just spent 3 weeks waiting for a title search, right? Meanwhile, of course, Bergen County, I should say, already kind of minted hundreds of deeds on Avalanche. So once that system is live nationwide, title searches could shrink from weeks to seconds. Now, you'll close on a house faster than Amazon delivers socks. And that's when grandma stops asking, what's a blockchain? And starts asking which wallet supports my condo. All told, of course, we're kind of standing at the tip of an economic iceberg then, right? The mass behind the kind of waterline, tokenized stocks, bonds, gold bars, farmland, makes today's DeFi TVL look like poker change. The early kind of networks slicing into that iceberg are carving out moats so wide that you're going to need a jet ski to cross it. So if you've got value from my sleep-deprived detective work, then you know the drill. Tap that subscribe so that the algorithm doesn't hide the next deep dive. Catch you in the Discord, and may your coffee taste better than mine.